So we are doing this categorized worksheet of break-even point related questions for MCQ. Can you please read the question?
The following information is available for a business. The business wants to reduce the break-even point to 1500 units. Which strategy will not achieve the target break-even level?
1 minute. So you have some information available, and what do they want?
They want you to see which strategy will not help achieve 1500 units as
So
the
they
break-even.
want to reduce it to the break-even point of 1500 units. So can you tell me, if I want to reduce it to break-even point of 1500 units, what I have to do?
To find the break-even, you'll have to do fixed cost upon contribution per unit.
Okay. So you
So
have to do fixed cost upon contribution per unit. So break-even point, you want how many units? 1500 units.
Yeah.
Increase the selling price to 22.
So will be 1500.
Increase my selling price to 22. What will be my contribution per unit?
12.
Please use brains to answer.
Oh no, I was saying 12 is the variable cost to minus.
So what will be my contribution per unit?
Be 10.
So fixed cost would remain
The same.
15,000. Contribution per unit will become 10.
Will be
So it will
1500.
make it 1500 units. So this will help you achieve the target. Come on. Go to this one.
So reducing fixed cost to 12,750 and reducing variable cost to 1150 per unit.
So break-even point will be fixed cost upon contribution per unit.
Will be 12,750 upon 20 minus 11.50. So 8.5. 50 divided by 8.5. It gives you 1,500.
So this will also help you achieve.
Yeah.
Go to the next one.
Reducing fixed cost to 12,800. So 12,800 divided by 8.
Okay.
1,600.
So this will not help you achieve the break-even point that you are looking at. So the answer is option C. Okay.
Yeah.
Go to the next one.
A business makes and sells a single type of product. The following information is available. The business also has a semi-variable overhead associated with this type of product. The overhead is 32,000 when the output is 20,000 units, but rises to $40,000 when output is 40,000 units. What is the break-even point for this type of product?
What is the information available to you?
The selling price and the variable cost.
Okay, fine. You want to find the break-even point. To find the break-even point, what do you do?
Fixed cost upon variable cost. No, contribution, sorry.
Fixed cost divided by?
Contribution per unit.
Fixed cost divided by contribution per unit. What is your contribution per unit?
10.80 minus 2.2 minus 4.2.
What is the total variable cost?
6.40.
So what is your contribution?
Is 4.4.
Your contribution is 4.4. Okay. You want to find out the break-even point, right? So they should give you information for what?
The fixed cost.
Okay, fine. Go ahead, read the next part.
The business also has a semi-variable overhead associated with this type of product.
Okay.
The overhead is $32,000 when output is 20,000 units.
So this
But
overhead is semi-variable, right?
yeah,
So this is the semi-variable cost. Overheads is 32,000 when the output is
20,000.
okay. Read ahead.
But rises to $40,000 when output is 40,000 units.
Okay. To find the break-even point, what do you want?
The fixed cost.
Fixed cost. With this information, what are you arriving for fixed cost? This cost is what?
Semi-variable.
What is this cost?
This is the,
That means it is partly variable and partly fixed.
yeah,
If it is partly variable, partly fixed, that means I can get the fixed cost included in it.
yeah.
How do you get it? You have to
Not,
find the variable cost included in total cost.
yeah.
How do you find it?
Will I find per unit basis pay for both?
Change in cost upon change in output.
Okay,
Yes.
okay, yeah.
What is the change in cost?
Engine cost is 8,000.
8,000. What is the change in output?
20,000.
So what is the variable cost included in total cost?
8,000 divided by 20,000. It is 0.4.
So variable cost included in total cost is 0.4. So if I see over here, my variable cost per unit is how much?
0.4.
So find out the total variable cost for 20,000 units.
So 0.4 into 20,000. 8,000.
What is the fixed cost?
32,000 minus 8,000 will be 24,000.
How much?
24,000.
And for 40,000 units,
16,000 is included. So, second. So it is 24,000 again.
16,000. Fixed cost is
Yeah.
24,000.
Hmm.
Yeah.
Yeah.
A break-even point for this type of unit.
You will do 24,000 divided by 4.4.
Why 4.4?
So that's contribution. Huh?
But you've got variable cost now.
Oh yeah, we've got variable cost.
What is selling price?
It's 10.8.
Selling price is 10.8. Variable
Yeah.
cost is
6.4 and you minus 0.4 also. No?
sorry, 1 minute.
25.
So 10.8 was my selling price. And for this type of product, there was an additional variable cost of how much?
0.4.
0.4 per unit. So this was the selling price minus variable cost. So variable cost is 6.4 and additional variable cost is 0.4.
Hmm.
So what is my contribution?
It's 6.8.
10.8 minus 6.4 minus 0.4.
0.4.
So contribution is 4 per
Hmm.
unit.
Yeah.
So what is fixed cost?
24,000.
Fixed cost is 24,000. Contribution is 4 per unit. So my break-even point will become how much?
6,000 units.
6,000 units. So the answer is option B. I hope you're with me.
Yeah.
Can we go to the next one?
Hmm.
These are the latest paper questions related to break-even point. Come on, tell me. Read the question.
Garrett makes and sells bread. He has calculated how many loaves he needs to sell each day in order to break even. Which factor helps him accurately analyze his break even point?
Can you tell me? What does he want to find?
Which factor helps him accurately
How
analyze his break?
many loaves he needs to sell each day?
Hmm.
Okay. How many loaves he needs to sell each day in order to break even? What is break even point?
The point at which there is no profit or loss.
It is that point of sales where you make no profit, no loss.
Hmm.
Okay, it is that point of sales where you make no profit, no loss. So, what factor will help him accurately analyze his break even point? Can you please read the options?
Because production is sold on the day it is made. He sells several different types of breads. Seasonal
Does
effects
this
or
have any impact on break even point?
no, I don't think so.
Does this seasonal effect have any impact on the break even point?
No.
No. Anything that could have an impact on the break even point is fixed cost, variable cost, and the number of units that you are producing and selling.
Hmm.
Selling price reduced at the end of the day.
So selling price is not required in break even. So it'll be
So
A.
contribution selling price is not required.
Yeah, it is. It is.
So now I am confused between option A and option
Hmm.
B.
Hmm.
If he exactly knows if all of his production is getting sold,
Hmm.
selling price, then he can reduce or not reduce, will have the second step decision.
Okay.
So what do you think? Which option?
It'll be A because D will be secondary. First, you need to see how many products you're selling.
Okay, fine. Come on, read the next question.
A business has the following information about a type of product. What will happen to the break-even point and the margin of safety if fixed cost increases to 32,000?
So fixed cost is increasing to how much?
32,000.
Okay. So find the break-even point at 25 break-even point when your fixed cost is
25.
25,000.
Hmm.
Okay. And find the break-even point when your fixed cost is 32,000. And tell me what will happen to the break-even point if your fixed cost is increasing.
Okay.
Come on, fixed cost break-even point when your fixed cost is 25,000 units. Can you please guide me?
25,000 divided by 8.
What contribution per unit is 20 minus 12.
Yeah.
So this will become how much?
8.
The
Will be
break-even point
3125.
3125.
Hmm.
And break-even point at 32,000 units,
4,000.
20 minus 12,
Hmm.
4,000 units.
Hmm.
So what is happening to the break-even point?
There's an increase.
Increase by how many units?
875.
875 units.
Hmm.
So it could be option C or D. Am I right?
Yeah.
Next, what?
Margin of safety.
Okay, margin of safety. What will happen to margin of safety?
So margin of safety is actual minus break even. So if break even is increasing, the margin of safety would reduce.
Actual minus break even sales. So actual sales is how much? So we have a break even point at 25,000 fixed costs.
Yeah.
And we have a break even point at 32,000 fixed costs. Yeah? Actual sales is how much?
Actual sales isn't given to us.
In break even point, what do we assume in marginal costing?
That or everything that you produce is sold.
So actual is how much?
80,000 units into selling price.
Darling, you're finding the margin of safety in units, right?
Yeah, so 8,000 units.
Yeah. So how do you get the margin of safety?
So 8,000 minus 3,125.
Yeah. So it will become how much?
4,875.
And this?
It will become 4,000.
The margin of safety is
Reducing by 875.
875. So it will be option.
C.
I hope it's clear.
Yeah.
Next one.
The following budgeted information is available for a business. What is the budgeted break-even point and sales revenue?
How do you get
Okay, so it'll be
break-even
fixed.
point in dollar value?
Yeah, so it's fixed cost upon contribution.
Are you sure?
Yeah, you have to do contribution, the total one, not the in point, like unit wise.
You will do the CV ratio,
Yeah, sorry, CS ratio,
contribution to sales ratio.
yeah.
Okay, what is fixed cost?
Fixed cost is 120,000.
What is contribution to sales ratio?
Contribution isn't given to us, so we'll have to calculate it.
How will you calculate it?
So profit is given and fixed cost is given.
Yeah,
So I'll have to add 88,000 plus 120,000.
we will make this format.
Yeah.
Variable cost is 52,000. Fixed cost is 120,000. Profit is 88,000. Contribution will be profit plus fixed costs. So it will become how much?
Okay, so first contribution will be 2,08,000.
Yeah.
Then you'll add the variable cost. So 2,60,000.
Hmm.
Now you found the sales and you found the contribution. You can find the CS ratio.
So 2,08,000 over 2,60,000 into 100. Yeah.
Yeah,
So contribution to sales ratio is how much percent?
3%.
So break even point in dollar value will become how much?
Uh, 150,000.
150,000.
Hmm.
Are you with me?
Yeah.
But the answer is option C.
Mm.
The answer is option B only. This is wrong over here. Okay. Come on, go ahead.
How is break-even point in units calculated?
How is it calculated?
Fixed cost divided by contribution per unit.
Which option?
A.
Okay. Read the next one.
What is equal to total revenue at the break-even point? The
Okay.
total cost will be total variable and fixed cost.
How?
It will be total cost, na?
What is break-even point in dollar
No,
value?
no. Yeah, but it's asking what is equal to break-even point at total revenue.
Oh, what is equal to total revenue
Total
at
revenue
break-even
at
point?
break-even point
So total revenue. So at
is equal
break-even
to
point, you
total
make
cost.
no profit, no loss.
Yeah, so total revenue is equal to total cost.
So no profit, no loss. That means there is no profit. So the revenue, the sales will be equal to cost at break-even point. Okay. So which option you said? Total variable and fixed cost. Okay. Read ahead.
A business makes and sells a single product. The budget for sales of 5,000 units is as follows. The company plans to reduce the selling price to $60 per unit. How many extra units will need to be sold to break even?
What is the formula for break-even point?
Fixed was about contribution per unit.
Contribution per unit.
Hmm.
So if I'm reducing my selling price to how much? Are you with me?
Yeah.
So if I'm reducing my selling price to 60, what will be my new contribution? What will be the new contribution?
30.
Huh?
30.
How?
25 minus 5. 60 minus 25 minus 5.
It will be 60 minus 30. So it will be 30. So fixed cost will be?
They've given fixed production cost as 18.90.
Contribution will be 30 per unit.
Hmm.
If I have the fixed cost per unit, what will I multiply it with to get the total fixed cost?
The budgeted
Budgeted
sales.
sales. So my fixed cost will become how much?
5,000 into 18.9. 94,500.
How much? 94,500
500.
divided by contribution per unit. So it's coming up to how much?
94,500 divided by 30. 3,150.
3,150. How many extra units will be needed to sold to break even? So this is when I reduce the selling price.
Hmm.
When I reduce the selling price, my break-even point would be 3,150 units.
Hmm.
If I don't reduce the selling price, what will be my break-even point?
75 minus 30. 45.
So break-even point at normal selling price would be 94,500 divided by 75 minus 30. So it will be how much?
2,100.
So how many extra units I will have to sell?
Wait 1 sec. I think I made a mistake.
What mistake you made?
Wait, 90. 1 sec. 75 minus 30. No, it's correct. Only 2,100.
Correct.
Yeah, it's correct.
When
It's correct.
you had your normal selling price,
1050
you
extra.
were doing break even at 2,100 units.
Hmm.
When you reduce the selling price, you are doing break even at 3,150 units. So the extra units that you need to sell would be 1050. It will be option B. Read the next question.
Option B, right? A company wants to sell 50,000 units and achieve a profit of $600,000. It has variable cost of $60 per unit and total fixed overheads of $400,000. What is the selling price per unit it needs to change to achieve the required profit?
Okay, fine. What is the selling price per unit you need to charge to achieve your desired profit? Tell me. What is your desired profit?
$600,000.
Fixed cost is 400,000 and desired profit is 600,000. So we know sales to achieve desired profit. Sales to achieve desired profit is what is the formula for it?
Sales. You mean selling price, na? So this
The
is fixed cost.
The sales to achieve the desired profit would be fixed costs plus the desired profit divided by what?
The units.
There is a formula that you usually use to find out sales in dollar value to achieve desired profit. And the formula is fixed cost plus desired profit divided by contribution to sales ratio.
Okay.
But here I don't know the selling price, so I cannot use this formula. So what will I do is, since it is a marginal costing sum, I will proceed with my normal format. And my normal format says sales minus variable cost is contribution minus fixed cost is profit. And I want to achieve a profit of 600,000 by selling 50,000 units. So if I want to achieve a profit of 600,000 by selling 50,000 units, that means my profit per unit is 12. Okay. I've been already given the fixed cost, which I will just put in place. So I will get my contribution. So contribution is 10 lakh. 10 lakh divided by 50,000 units. So I will get my contribution per unit as 20. Are you with me?
Yeah.
I already know my variable cost, that is 60. So to get this profit of 12, I need to sell my products at 80. So if I sell it at 80, 50,000 units, I am going to make my target profit of 600,000. We just did reverse and per unit. Are you with me?
Yeah.
So the answer is option D. Yes.
Yeah.
Let's go to the next one. Please read.
The following information is available for a month. When calculating the contribution to sales ratio, the bookkeeper treated the variable overheads as fixed by mistake. What was the effect of this on the contribution to sales ratio?
Okay, try. What did my bookkeeper do? He thought that this variable expense is entirely fixed. That means for him there was no variable cost. Okay. This was entirely fixed, so the total cost was only variable cost according to the bookkeeper.
Oh, okay.
So what happened is that we will first calculate our original contribution to sales ratio. So we say sales minus variable cost gives us contribution. So our actual contribution to sales ratio is 83.75. Now our bookkeeper has done an error. He had sales of 160,000 and for him there was no variable cost. He thought this full is fixed. So the contribution is how much? 160,000 because for him there was no variable cost. So sales contribution over sales into 100. This is giving us 100%. Yeah. So what is the effect of this error? Effect of this error is that in error, your contribution to sales ratio is 100%. But actual contribution to sales ratio is 83.75%. So your contribution to sales ratio is high by 16.25%. Are you with me?
Yeah.
Can we move ahead?
Yeah.
Come on, go read.
A company makes and sells a single product type which has a selling price of $20 per unit. Variable costs are $8 per unit, and total fixed costs are $7,000.
Okay.
The company wishes to achieve a target profit of $20,000.
Okay, fine. How many units should be produced and sold to achieve target profit? So what will I do? Sales minus variable cost is contribution minus fixed cost is profit. Sales is 20. Variable cost is 8. Contribution is 12. Yeah?
Yeah.
I don't know how many. I want to find the number of units produced. How will I find out? So units sold to achieve the target profit would be fixed cost plus target profit divided by contribution per unit. What is our fixed cost? 7,000. Target profit is 20,000. Contribution per unit is 12. 27,000 divided by 12. So 2250 units should be sold to achieve target profit. Are you with me?
Yeah.
Let's go ahead a little faster now. Read.
The selling price of a product remains constant, in which circumstances will the break-even point in units decrease.
Okay, selling price is remaining constant. So selling price minus variable cost is contribution minus fixed cost is profit. Selling price is remaining the same. What is the formula for break-even point?
Fixed cost upon contribution.
Fixed cost divided by contribution per unit. And contribution is made up of what?
The selling price minus the variable
Sales
cost.
minus variable cost. This is remaining constant.
Yeah.
If the contribution per unit will reduce, if the contribution per unit will increase, the break-even point will reduce. I'm repeating it. You can write it as notes. If your contribution per unit will increase, that means the number of amount of money you are collecting towards contribution towards fixed cost. If your contribution will increase, the break-even point is definitely going to reduce because now you will have to sell less number of units to be at a situation of no profit, no loss, because every unit will be contributing more money towards recovery of fixed costs. Selling price is constant.
Yeah, so variable cost will have to increase.
So variable cost will have to decrease if I want the contribution to increase.
Yeah.
If the variable cost will decrease, that means you will collect more money by selling the goods. Variable cost can decrease in which scenario? There is a decrease in material cost, decrease in variable cost.
Yeah.
Okay?
Yeah.
I'll go ahead. Come on. Read the next question.
Wait, a business has the following information. What is the total fixed cost?
Come on. What is the total fixed cost?
You have to calculate it, no?
So break-even point is
5,000 units. Okay. Is that fixed cost from contribution?
you get a break-even point in dollar value because I've been given the contribution to sales ratio. So fixed cost upon contribution to sales ratio. What is fixed cost? I don't know. Do you know break-even point in dollar value?
Break-even point in dollar, no.
No. So now let us do the other way. You'll have sales minus variable cost is contribution. Variable cost is 27. Contribution is 40% of sales. Yeah?
Yeah.
So variable cost is 60%. The sales is 100. 60% represents 27. So what is 40? $18? Are you with me?
Yeah.
So what is the selling price? 45?
Yeah.
Yeah?
Yeah.
Break-even point in units. Fixed cost divided by contribution per unit. 5,000, what is the fixed cost? I don't know. Contribution per unit is 18.
So 5,000 into 18. 90,000.
90,000. Are you with me?
Yeah.
Can we proceed or you want to go?
I'll go.
See, I am doing break even in 500 units. Okay. And I want to reduce the break even units to 400 units or to a lower amount. So what should I do?
Not sure, miss.
So if I want to reduce the number of units to be sold to break even, I can increase my selling price.
Yeah, increase selling price.
Or you could reduce your variable cost. If I want to reduce the number of units to be sold so that I can
Yes.
make no profit, no loss at a lower number of units. So the main thing is that you have to increase your contribution.
Yes, miss.
What is increasing contribution? Contribution is the amount that every unit contributes towards the recovery of fixed costs.
Yes, miss.
If you increase your contribution, you are going to increase your break-even point.
Yes, miss.
And what does the contribution help you to get?
The break-even point.
But what does it help you to get? What does it help you to calculate?
To calculate profit or loss.
In the absence of contribution helps you to calculate the contribution in the absence of what?
In the
Variable
absence
cost.
of variable cost, yes.
Okay. Now I want you to read this question and we'll go ahead with it. I have recorded the previous question, so I will upload it and you can do the remaining things. But now start from question number 26. It's of CVP analysis, the break-even point analysis.
Okay, miss.
Go. Come on, read.
When might a business calculate its contribution to sales ratio rather than contribution per unit?
So what is the difference between a contribution to sales ratio and contribution per unit?
Contribution to sales ratio is contribution per unit is selling price minus variable cost, and contribution to ratio is the CS ratio, which is contribution divided by sales into 100.
So when will you calculate your contribution to sales ratio rather than contribution per unit? So remember, when you're making one unit or a single type of a unit, at
Yes,
that
miss.
time you will calculate contribution per unit.
Yes, miss.
Okay. At that time you will
Yep.
calculate contribution per unit. But if you are making different products, what you're making,
Yeah.
if you're making different products or several products,
Yes, miss.
at that time you're going to calculate contribution to sales ratio.
Yes, miss.
Okay. What is the formula for contribution to sales ratio?
Contribution divided by sales into 100.
Contribution divided by sales into 100. Okay, so can you give me the answer for this? When will you
Yes, miss.
calculate your contribution to sales ratio rather than contribution per unit?
It'll be B, miss, when the business produces and sells several different products.
It has nothing to do with the fixed cost or limiting factor.
Yes,
Okay,
miss.
come on. I'm putting the 27. Try to do it yourself. You have to calculate your break-even point in units.
Yes, miss.
Will you
The break-even
calculate
point, the formula is total fixed cost divided by contribution per unit.
it?
The total fixed cost is total manufacturing overheads plus total administration overheads, which is 480,000. Then to find contribution, you need to do selling price minus variable cost, which is 50 minus 30, and you get 20. So 480,000 divided by 20 is 24,000, which is option D.
Okay, very good. Let's go ahead. Come on. Solve. Contribution to sales ratio. How do you
Okay,
calculate?
yes, ma'am. To find contribution to sales ratio, the formula is contribution divided by sales into 100.
What is the sales?
The sales is 85,000.
What is the contribution?
To find contribution, you have to do sales minus variable cost. So it's 85,000, 56,700.
The total of all this is how much?
56,700. And my contribution was 28,300. So 28,000 divided by 85,000 into 100 is 33.29%.
Very good. Option B. Come on. Go ahead. You don't know this question?
Yeah, miss, I'm confusing this question.
Okay. The company is giving you this information. You have sales variable cost, sales minus variable cost, your contribution is 60, fixed cost
Yes,
and
miss.
break-even point. If your business changes the production method, the contribution will increase by 10%. Our original contribution is how much?
60.
So your original contribution is 60. it will increase by 10%. So if you change your method, your new contribution will become 60 into 110%. Your new contribution will become 66. Yeah?
Yes, miss.
Your fixed cost will increase by 5%. So your new fixed cost will become 105%. So 20
Yes, miss.
100 into 105%. Your new fixed cost will become 22,680.
Yes, miss.
What would be the effect on the break-even point?
Okay, miss. So I have to just do the formula.
Yeah, so what
Okay.
is your break-even point formula?
It's total fixed cost divided by contribution per unit.
So what is your total fixed cost now?
It's 22,680.
New contribution?
Divided by 66.
So 343.63, or I could say it is 344 units.
Yeah, miss. Oh, miss, it'll be, then I think it'll be C, right? Because it's
I don't
increasing
know,
by,
huh? So this is decreasing.
yeah, miss. Oh, yeah, sorry. Yeah, it's A.
360 minus 344. So it
Yeah,
is how
miss.
much? Your break-even
16.
point is decreasing by 16 units.
Yes, miss.
Are you with me?
Yes, miss.
The answer is option A. We go to the next one.
Yes, miss.
Read the next one.
A company makes and sells a single product. The following budgeted information is available for 1 month. The directors are able to reduce the variable cost to 500 per unit. By how many units can budgeted sales reduce to achieve the same monthly profit?
So you want to know that if you are able to reduce your variable cost,
By
how many
500?
units your budgeted sales should reduce and you want to achieve the same profit. So first we
Yes,
will
miss.
find out our original profit.
Yes, miss.
How do you find your original profit?
Selling price minus variable cost, you get contribution, and contribution minus fixed cost, you get your profit or loss.
Okay. What is your selling price?
My selling price is 750,
Variable cost?
550.
Contribution?
Contribution is 200.
Okay. What is your total contribution?
My total contribution is contribution to this sales contribution per unit into sales volume. So it'll be 200 into 6.
So total contribution will become how much?
Total contribution will become, it'll become 120,000.
Your fixed cost is 80,000.
Yes, miss.
So your profit for the year will become how much?
40,000.
40,000. You want to maintain the same level of profit.
Yes, miss.
So that means you want to maintain same level of profits. Now you want to know the number of units that you have to sell.
Yes, miss.
Okay. What you going to do? You're able to reduce the variable cost to 500 per unit.
Yes, miss.
I have selling price minus variable cost. This is the revised version. Contribution minus fixed cost profit.
Yes, miss.
I want to know the number of units that I have to sell, but the profit should remain 40,000.
Yeah, miss.
Okay. Selling price would remain the same.
Yes, miss.
Variable cost will become 500.
So the contribution will be 250.
Contribution will be 250, but I don't know the number of units. I know
Yes,
one
miss.
thing, that fixed cost will still remain the same.
Yes, miss.
And I want to make a profit of 40,000.
Yeah, miss.
So my new contribution would be, it would be 120,000.
Yeah, miss.
This into units would give me 120,000.
Yes, miss.
So 120,000 divided by 250, it will be how many units?
It'll be 480 units.
So how many units you have to sell to get the same level of profit?
480 units.
You understood what I did?
Yeah, miss, I understood.
You wanted the same profit to be there.
Yes, miss.
Fixed cost will remain the same.
Yeah.
So your contribution would remain the same because you wanted the profit to be same.
Same, yes.
But
So
contribution
you have
per unit has reduced.
reduced, yes, miss.
It has reduced to 250.
Yes, miss.
So to get the same amount of contribution, first I needed to sell how many units?
First, you needed 600 units.
And now?
Now you need 480 only.
Yeah, now you need 480 units only. Are you with
Yes,
me?
miss. Yeah, yes, miss.
Please go to the next question and try it.
Okay, miss.
How did you get it? Say.
Okay, miss. To find the total, the budgeted break-even sales revenue, first you need to do total
That
fixed
means
cost
you put
divided
the
by.
break even and dollar value.
Yes, miss.
So what do you do?
Total fixed cost divided by CS ratio.
Do you have
The
total
total.
fixed cost?
Yes, miss.
How much is it?
420,000. Yes, miss. And for the CS ratio, its first contribution is given, which is 360,000. And you have to find the sales. So you have to add contribution and variable costs, which gives you which is 900,000.
So contribution
Yes,
sales ratio will become how much?
will become 360,000 divided by 900,000 into 100, which is 40.
40%.
Yes, miss. 40%.
So break-even value at sales value
will be 1,050,000.
Okay. Come on, go ahead.
Yes, miss.
Try this. Come on. You want to know the total fixed costs if your plan is carried out. Okay.
Yes, miss.
Your target profit is 80,000. And last year, your business made a profit of 60,000 when 10,000 units were produced and sold.
Yes,
Contribution was 10,000 units. So when you
yes, miss.
and sold 10,000 units, you made 60,000 profit and contribution was 10. Are you with me?
Yes, miss.
In order to achieve your target profit, the plan is to increase the advertisement by 10,000 per annum. Variable cost and selling price will remain unchanged. So what will I do?
Miss.
This is last year and this is your current year. Okay?
Yes, miss.
Are you with me?
Yes, miss.
I know sales minus variable cost is going to give me contribution. Contribution minus fixed cost is going to give me profit.
Yes, miss.
Last year, my profit was how much?
60,000.
Last year, my profit is 60,000. And I want this year the profit to be how much?
80,000.
Okay. So this is of last year my profit was 60,000 and this year I want my profit to be 80,000. Is there any doubt that you have over here up till now?
No, miss.
Okay, fine. Very good. Read other information that you have. Last
Okay,
year
miss.
10,000 units were sold and contribution
Yes,
was 10 per unit.
yes, miss.
So contribution
Yeah.
was 10 per unit. So if I multiply 10 per unit into 10,000, so my last year contribution was 100,000.
Yes,
Are you
miss.
with me?
Yeah, miss.
Okay, fine. So what would have been my fixed costs?
Your fixed cost would have been
40,000.
8,000. Yeah, sorry.
Yeah?
Yes.
Okay, fine. Now I go to the other information. In order to achieve my target profit of 80,000, I have to increase my
Yes,
advertisement
miss.
by 10,000. So my fixed
Yeah.
cost would
So
become 50,000.
Fif-
Yeah?
oh, and contribution will be
Contribution
30,000.
will become how much? 8, 9,
Contribution will
130,000.
one. Yeah.
Now try if you can. So you've already answered your question. Your fixed cost, if you carry out your new plan, your fixed cost would be 50,000. Marginal costing is basically the most easiest thing because everything follows the same format.
Yes,
With me?
miss. Yes, miss.
Come on, go ahead. Try the next one.
The recording.
What is budgeted?
Okay.
Where were we?
Above. Yeah, this question.
Budgeted break-even sales revenue.
Yes, miss. Okay, to find the break-even sales revenue, the formula is in dollars. To find the formula is total fixed cost divided by CS ratio. The total fixed being 150,000 plus 90,000, which sums up to 240,000.
Total fixed cost divided by
CS ratio.
in revenue. Okay, fine. What is the total fixed cost?
240,000.
Okay. And CS ratio?
CS ratio is 260,000 divided by 650,000 into 100, which is 40%.
1 minute.
Sorry, miss. 260,000 divided by 650,000.
Okay, so what is
Yes.
percentage?
40%.
Okay.
And the final answer is 600,000.
Option?
Option D.
Okay. So with this, we complete this PPT of the break-even point.